Welcome to DEEKSHA Concept Based Digital Learning. I am N.SRINIVAS Reddy, JL Commerce, TSWRS, Hathnoora. Today class we will be discuss the following: definition of the banking, meaning of the bank, functions of the banks, different kinds of deposits, making loans and advances, agency functions, general utility services. Definition of banking. In the medieval age, Italian states were sound and solvent economically and commercially. At the time, a group of people used to conduct business transactions of money sitting on a stool or bench, which was replaced by banco, banca, bank, bankers, bank, etc. It is assumed that the word bank was originated from the words. Banking can be defined as the business activity of accepting and safeguarding money owned by other individuals and entities and then lending out this money in order to earn profit. Meaning of bank. A bank is a financial institution where customers can save or borrow money. Customers' money may be placed in the bank for safekeeping. Banks may give loans to customers under an agreement to pay the money back to the bank at later time with interest. Normally, banks accept deposits from individuals, organizations, and companies, etc. And they lend that amount to car loans, house loans, mortgages, business loans, and any other type of loans. Banks raise funds by lending money at higher rate of interest than the borrowers it. It means normally banks pay interest on deposits is less. It means 3 to 8% and collect interest from their lending is normally more than. It means it may be 7 to 16%. The margin is profit to the banks. They meet their expenses with that margin and service charges from their customers. So here the functions of banks is 1. Acceptance of money, deposits from the public. 2. Making loans and advances. 3. Undertaking agency services. 4. Rendering general utility services. Now we are going to explain the all the functions one by one. First is acceptance of money, deposits from the public. Here accepting deposits is the most important function of a commercial bank. The bank borrows money from the public by the way of accepting different kinds of deposits. They are repayable on demand. Generally, banks accept the following types of deposits. That is, 1. Saving account, 2nd one current account, 3rd one fixed deposits, 4th one recurring deposits. So now we are explained one by one. First is a savings account. A savings account is a basic type of bank account that allows you to deposit money, keep bank account that allows you to deposit money, keep in safe and withdraw funds all while earning interest. The features of the savings account here is 1. No restrictions on the number and amount of deposits. 2nd one is savings account comes with a passbook and checkbook facility. 3rd one, some restrictions in withdrawals, but in India, due to more competition, there is no restrictions for withdrawal of cash. Next one is less amount is required to open account. There is no additional charge for e-banking facilities like debit card, net banking, etc. 5th one, a saving bank account earns interest also, but it is less. Normally it is 2 to 4% in our India. 6th one, savings account are easy to open and you can withdraw and deposit money at any time. 7th one, saving account is of continuing nature. There is no maximum period of holding. Next one is current accounts. It is non-interest bearing account. It needs a higher minimum balance to be maintained as compared to the savings account. Example, all commercial nationalized banks like SBI or other banks, it requires rupees 10,000 to open the account, and all other private banks like ICICI, HDFC, it requires 25,000 minimum required amount to open these current accounts. Here, if they are maintained minimum account, they will pay charge on form of penalty. So it charges interest on short-term funds borrowed from the bank. Normally, this account held by institutions, government, and businessmen. If you observe, the features of the current account is one, here 0% interest on the current account deposits. Second, unlimited transactions. Third, unlimited free cash withdrawals for the current accounts. Third one, multi-city and free check slips. Fifth one, overdraft facility. Sixth one, free monthly statements. Seventh one, online banking. Eighth one, value added services. And last one, issue of bank guarantee to the current account holders. Next one is fixed deposits. Here, fixed deposit is an investment instrument offered by banks where you can deposit money for a higher rate of interest than savings account. You can deposit a lump sum of money in fixed deposit for a specific period which varies for every financial year. Once the money is invested with a reliable bank, it starts earnings. Interest is based on the duration of the deposits. Usually, the defining criteria for fixed deposit is that the money cannot be withdrawn before maturity, but you may withdraw them after paying penalty. So here the features of fixed deposit is one, amount can be deposited only once. Second one, premature withdrawal is allowed but levied penalty. Third one, customer can avail loans against FDs. Normally, they allow up to 80 to 90% on the total fixed deposits. Next features of these fixed deposits is, fourth one is guaranteed return. Fifth one is on maturity, an FD can be directed toward renewal or withdrawal. Next, deposit term is minimum is 7 days, maximum is 10 years or more. Seventh one is rate of interest is more than other accounts like savings account, current account, recurring accounts, etc. Next, fourth one is recurring deposits. Here, recurring deposit is an investment product that is made available by banks. The principal amount invested earns interest at a regular intervals, means every month, and the lump sum is handed over to the depositor at the time of maturity. Although recurring deposits is a safe investment option and the return on investment is mostly guaranteed. If you observe the features of recurring deposit is, here one is recurring deposit schemes aim to inculcate a regular habit of saving among the public. Second one is minimum amount that can be deposited varies from bank to bank. It can be an amount as small as rupees 10 also. Next one, the minimum period of deposit starts at 6 months and the maximum period of deposits is 10 years. Fourth one, the rate of interest is nearly to that offered for a fixed deposit, hence higher than any other savings schemes. Fifth one, premature and mid-term withdrawals are not allowed. Seventh one, recurring deposits offers the additional benefit of taking loan against the deposits by using the deposit as a collateral. About 80 to 90% of the deposit value can be given as loan to the account holder. Next is making loans and advances. It is the second function of the banks. Lending money is one of the two major activities of any bank. Bank accept deposits from the public for safekeeping and pay interest to them. They lend that money to earn interest. Commercial banks lend the amount which it mobilizes through the deposits. Lending is purely profit motive. Forms of lending here is, one is cash credit, second one is loans, third one is purchasing and discounting of bills, fourth one is overdraft. Now we are going to explain one by one. First is cash credit. A cash credit is a short-term source of financing for a business. In other words, a cash credit is a short-term loan extended to a business by a bank. It enables a business organization to withdraw money from bank account with keeping a credit balance. The account is limited to only up to the borrowing limit. Also, interest is charged on the amount borrowed and not the borrowing limit. It enables a business to withdraw money from a bank account without keeping a credit balance. The features of this is, one, borrowing limit is fixed by a bank. Second one, interest on running balance only. Third one, collateral securities required for the cash credits. Fourth one, minimum commitment charges is required to accept taking the cash credits. Fifth one, credit period is maximum 12 months only. So next loan is the second option is loans. These are direct loans given to all type of customers. These loans are given against the security of the movable and immovable properties. The amount of loan is paid as cash or customer's account is created with it, so that he can withdraw the amount from his account at any time. The interest is charged on the full amount of the loan irrespective of the amount of cash withdrawn by him. Next is, the loan is repayable in a lump sum on the expiry of the term for which loans was given. Banks themselves are permitted to determine the rate of interest to be charged on the direct loans. Here the classification of loans is A, demand loan, B is the term loan. Now we are going to explain demand loan. Here demand loan is also called call loan, and it refers to short-term loan which are repayable demand by the lender. So example of the demand loan is overdraft. Second is term loan. Term loan are granted for a specific period from time with fixed repayment schedule. Here the rate of interest may be fixed or floating. Term loans are extended for a longer duration of time. Normally, business organizations or other utilized this type of loan amount are purchasing of fixed assets, repaid the loan in regular payments over a set of period of time. Term loans last between usually 1 to 15 years or more. Next, third one is purchasing and discounting of bills. Discounting of bills of exchange is another type of lending by the modern banks. If the holder of bill of exchange needs money, immediately he can get it discounted by the bank. The bank pays the value of the bill to the holder after deducting its commission. When the bill matures, the bank gets payment from the party which had accepted the bill. Next is, by discounting the bill, the banker actually converts a future claim into present money, which enables the holder to carry on his business smoothly. If you observe the diagram here, first one is sale of goods. Here, seller is sold the goods to buyer. After receiving the bill from buyer, he handed the goods to purchaser or the buyer. Second one, he received the bill he may submit to the bank for discounting. Third one, bank discount the bill and pay the cash to seller. Fourth one, bank collect the amount from the buyer at maturity date. So next is fourth one, that is overdrafts. An overdraft is an arrangement by which the customer is permitted to draw money over and above the credit balance in his account. This facility is provided only to holders of current accounts. It is granted against some collateral security. However, the customers have to pay interest for the overdrawn amount. The features of these overdraft is here. One is mainly this facility provided to current account holders only. Second one, overdraft is awarded over a predetermined limit. Third one, interest rate is charged on the amount of overdraft used only. Here there is no prepayment charges when we paid the loan amount. Next is agency functions. The bank is an agent for its customers in a way that it invests on behalf of its customers. Acting as the agent of the customer, the bank may transfer funds, the collection of checks, periodic payments, portfolio management, periodic collections, and several other agency functions. Commercial banks provide certain services on behalf of their customers in return of some commission. These are called as agency functions. Classification of agency functions are: 1. Collect or make payment of checks, dividends, interest, rent, bills, etc. Second one, payment of subscription, rent, insurance, premium, etc. Third one, to act as a executor, trustee and attorney on the customer's will. Fourth one, to work as a correspondent, agent, representative of their customers. Now we are going to explain one by one. First one is collection of checks, dividends, interest, etc. Here banks accept standing instructions from the customers and they collecting checks, drafts, bills of exchange, dividends, interest, etc. on behalf of its customers and credit the amount in their accounts. It is one of the most important agency services rendered by the banks on behalf of its customers. Bank charges a small amount by way of commission for these services. Next, second function is here payment of subscription, rent, insurance premium, etc. Here banks undertake the payment of subscriptions, rent, insurance premium, electricity bills, etc. on behalf of the customers and debit the account with the amount. It accepts the standing instructions of the customers and arranges for the payment of such expenses on their behalf of. It charges a small amount by way of commission for these services. Next one is to act as a executor, trustee and attorney on customer's will. In modern commercial bank, besides performing the main functions that are accepting deposits and lending money, covers a wide range of financial and non-financial services to the customers and general public like executor, trustee and attorney. A person may desire that after his death a part or whole of his property be held in a trust for the benefit of various beneficiaries named in the will. In such a case, he may create a trust under his will directing a certain person to hold the property to such persons after a specified time. When the bankers take the liability to administrate of this type of property, he will be called as trustee. Normally, trustee and attorney are doing same duties. Fourth one, to work as correspondent, agent, representative of their customers. The banker acts as the agent of his customer in performing the following functions. 1. Payment and collection of subscription, dividends, salaries, pensions, etc. Bankers make payments and receive money on behalf of their customer in the following ways: payment of insurance premium, payment of membership subscription, library and professional associations, etc., payment of rent and salaries, etc. collection of dividends, pensions, rents, etc. Third one, transfer of funds from one account to another. Fourth one, some banks may even get the traveler's tickets, passport, etc. for their customers. The banker charges a nominal amount for these services. Next is general utility services. Besides agency services, commercial banks perform many general utility services also. Banks render these services not only to their customers but also to the general public. The following are some of the important general utility services here, that is 1. Letter of credit for foreign trade. Second one is safe deposit wallet. Third one, ATM facility, credit card and debit card. Fourth one, foreign bills for exchange. Now we are going to first one. First one, letter of credit for foreign trade. Here, letter of credit is payment instrument used majorly in international trade, in which a bank provides monetary guarantee to enterprises which deal in import and export of goods. Letter of credit can be used for both import and export purposes. Enterprises doing business overseas have to deal with unknown suppliers and they require assurance of payment before performing any transaction. Therefore, letter of credit is important to provide payment assurance to the supplier or exporters. The commercial bank issue letter of credit to enable the traders to buy goods on credit. A letter of credit is a document or order by a banker in one country authorizing some other banker in some other country to honor the drafts or checks or the person whose name appears in the document. Dear students, if you easily understand how the export and import trade or foreign trade easily going on, because without letter of credit it is not possible to do it. First of all, importer they ask with the exporter regarding sending of the goods, that is contract of sale between importer and exporter. Next one, second one. So here importer he meets his bank, that is importer's bank. He meets regarding the foreign exchange or the contract. If the importer bank accept, then third one, importer bank ask or meet or consult the exporter banker regarding the foreign trade of their concerned party. After accepting the exporter bank, that is the fourth one, exporter bank he ask the exporter regarding sending of the money. Fifth one, after accepting the exporter bank, then exporter sent the goods to importer. So here goods are received importer from exporter. Next one, exporter he informs, that is the sixth one, exporter he informs regarding the sending of the goods to exporter bank. Next, exporter bank inform that information sending of the goods or for exporting of the goods to the importer bank. Eighth one, importer bank inform sending of the goods to importer. So already if the importer is received the goods, there is no problem. If he is not received the goods, after receiving of the goods, importer send the money or the drafts, whatever it may be, to the bank, that is importer bank. 10th one is importer bank send DD or check or the cash to exporter bank for payment of exporter. 11th one is exporter bank pay cash or DD or check to the exporter, then exporter realize the cash, then this trade is completed. This diagram shows all the picture. I think you understand it clearly. So second one is safe deposit wallet. Safe deposit wallet is facility is available to the general public to enable them to keep their valuable such as shares, documents of land, gold, silver ornaments and other valuables. There is a separate section in the bank where lockers are provided in various sizes. yet payment of fixed rent. Next, the features of lockers is it is convenient size. Choose from range options small, medium and large. Second one, dual key security. One stay with customer and other with bank. Third, safety. Bank branches are equipped with high security features. Fourth one, easy of location. Fifth one, easy of payment. Sixth one, nomination facility. So next, second function is ATM. Third function is ATM facility, credit card and debit card. First one, ATM. It is an electronic delivery system. It is a convenient method of withdrawing money from bank without going to the bank through automated or automatic teller machines. It enables people to do their banking transactions at any hour of the day. Here, if you observe the ATM, the following features is there, that is balance inquiry, statement inquiry, pin change, cash deposit, check deposit, funds transfer, credit card payment, utility bill payment, checkbook request, insurance premium payment, mobile, DTH, etc. recharge and top up all these. Second, debit card. Debit card allows the convenience of the withdrawing money from your bank account at your convenient time. You can also make purchase by swiping the card at a store. Here, debit card is linked to our bank account from where money is deducted every time a transaction is done. Automatically, message sent to the registered mobile number. Third one is credit card. A credit card is a type of payment card in which charges are made against a line of credit instead of the account holder's cash deposits. When someone uses a credit card to make purchase, that person account occurs a balance that must be paid off each month. So next is foreign bills for exchange. Here, foreign bills of exchange means it is a payment drawn up in one country that is payable in another country. The foreign bill of exchange is an agreement drawn up between two countries for trading purposes. In the case of foreign trade, bankers accept bills on behalf of customers and make payment on due date on these bills. Later on, they collect from the customers. Features of this is a bill of exchange needs to be in writing. It should essentially include an order to pay. Third one, it is required for the order to pay to be unrestricted. So dear students, today we are discussing the functions of banking. Here we are discussing all it elaborately, that is acceptance of deposits from the public, lending of the money, agency services and general utility services. So dear students, it is the Corona time. So please stay home and safe home. So thank you for your attention.